So what's it worth, Oliver, in a takeover?
Sarah, it's great to
Kohls?
be here. We think it's worth 75 or more, as much as $80 per share. There's a few things happening here. One, real estate. Real estate could be valued at $3 to $7 billion. $3 billion of that could be achieved in a sale leaseback. So monetization of real estate, unlocking value here. Two, Kohls has very healthy free cash flow, about $1 billion a year. That's 15% free cash flow yields. And third and finally, Kohls is trading at a very modest PE, about 9 times versus an 11 times 3-year average. So these are all factors that really give us optimism, as well as the base business, thinking about Sephora, Active, the brands they're developing, and the off-mall exposure. And don't forget about the Amazon partnership as well.
Right. So do you think that management and the board is going to go for it? You think this is ultimately how this saga ends?
Our take is that there's a high degree of likelihood, 60 to 70% or more. That being said, the risk factor and the hurdles to look at include monetization of this real estate through a sale leaseback, achievement of the financing, and if that can't be done, can a bidder raise the right amount of debt and equity to complete the deal? So those are all factors to watch. That all being said, this company is in play. You know, the Kohls cash event is happening, and the board of directors needs to evaluate all potential outcomes and act in the best responsibility of shareholders, Sarah.
So Oliver, it sounds, if you're talking a lot about a sale and leaseback of the property, that there's a bit of financial engineering that a buyer can do. That's a slightly unfair description, but it's more a few one-off big moves like that will create the value to justify this price, as opposed to this being strategically attractive medium to long term. Is that fair or not? Or are there lots of other kind of strategic levers they can pull?
Yeah, I would say that certainly that's a big part of the value creation. Kohls owns about half the stores, and they're off-mall. Those have become increasingly valuable properties, and there's as much as $7.8 billion of real estate in terms of what this company owns. That being said, if a sale leaseback is not able to occur, the leverage ratio on the LBO would move to about 4 times or higher. That would require a bigger check and the financing needs around that. That's possible too. We'll just have to see. But the name of the game in retail is real estate does have tangible value, and rethinking retail in terms of unlocking that, that's another avenue that we're seeing across a lot of department stores. You know, we like Macy's as well. There's about $2 billion of real estate value there, $7 per share. So we're watching that as well.